Good evening. Woo, baby, we got a lot to talk about tonight. So yes, Trump is proposing the 50-year mortgage. We are going to discuss it. I'm going to share with you what this means. I'm going to break down what that cost is actually going to be per month and also what you're going to pay in total interest over a 50-year period. Also in the news today, Fannie Mae is also removing the credit score requirement of 620 to qualify for a loan. People are now up in arms about that topic, and they're thinking we're headed back to another financial crisis by removing that requirement. Not so fast. I'm going to talk about that and give you more details as to what that all means. Plus, I'm going to talk about another lawsuit that's hitting Zillow. So yeah, this is a good one, guys. Zillow's not having a very good year. So we're going to talk about all this fun stuff. This is going to be a packed night. So thank you for joining me. Before we begin, the house rules, you all know. See the banner down below. You got to put QQQ at the beginning of your questions so my lovely producer can find your question and put it up on the screen, and I will answer it. If you have a housing win, did you get under contract? Did you close on a home? I want to know about it. Put it in the comments. Let's celebrate it. Even though the housing market's been challenging, people are still buying homes, and let's celebrate the wins. So this is my favorite part of my stream every Monday when we get to do that. There is also a poll, and it's just, a standard poll. Do you think the 50-year mortgage is going to make housing affordable? Yes or no way? I want to hear from you. I want to know what you guys think. I think I know what the answer is. You probably all aligned with me. I don't think it's going to do a darn thing for housing affordability, but we're going to get into that. I'm going to break it all down for you. Anyway, by the way, you guys are amazing. Before we started, Jen and I, Jen, my producer, we're looking at all the comments. So this never happened before. Like the whole conversation starting about 15, 20 minutes prior to the stream even beginning. This is great. So it's going to be a good one. Hi from Nashville. Hello, RS. Thank you for being here. Appreciate it. All right, let's dive in, shall we? So let's talk about this 50-year mortgage. Everybody's up in arms about it. Rightfully so. It's really not, I don't think this is a good thing at all. So I want to bring up the Housing Wire article first. Wait, hold on one second. What do we got going on there? Why is my share screen not working? Hold on, guys. Hold on. Please hold. Technical difficulties. Here we go. Hi, there you go. Okay. So let me make you a little bit bigger. So this is from Housing Wire. Where are you? Okay. So Trump proposes 50-year mortgage to help affordability. However, the Dodd-Frank Act passed after the Great Financial Crisis only allows for 30-year terms or less. I'm going to talk about that a little bit too. So there is a little snag here. It's not going to be that easy for them to be able to put through this 50-year loan because of that act, but we'll get into that. All right. So Trump on Saturday posted an image on social that seemed to suggest he would be proposing 50-year mortgages, something FHFA Director Bill Pulte confirmed shortly after on X. The image Trump posted on Truth Social featured a headshot of President Franklin Delano Roosevelt under the title 30-year mortgage and his own headshot under a title 50-year mortgage. Pulte then replied, "Thanks to President Trump, we are indeed working on the 50-year mortgage, a complete game changer." As with other official announcements on social posts, there wasn't a lot of detail provided, and nothing has been posted on the White House press page as of this writing. The president has been focused on the issue of housing affordability throughout his term, leading off on Inauguration Day with an executive order for emergency price relief in housing. He's also pressured Federal Reserve Chair Jerome Powell to lower interest rates and launched investigations against Fed members and tried to fire them to try to achieve lower rates. Longer fixed rate amortization on mortgage loans would lower monthly payments. Using Fannie Mae's mortgage loan calculator with 20% down payment, a mortgage rate of 6.575%. The breakdown below shows payments at different home prices and mortgage terms. This is just for principal and interest. It does not include property taxes and insurance. So let me show you guys really quick. I just want to pull this down And I want to show you my little slide that I made. You're going to be so proud of me. Okay. So if you look here, I took a screenshot. If you're borrowing $400,000, your 30-year fix, your principal and interest, your payment's going to be $2,038. Forget the 40-year fix. We're not looking at that. 50-year fix, you're looking at $1,822 principal and interest. The difference between the 30 and 50 years is $216 a month savings. That is it. That is it. Now, total interest paid over 50 years, $907,934. Paid over 30 years, $486,632. Are you for real? So for a $216 a month savings, yet you're paying close to, like, for a $400,000 loan, you're close to $1 million you're paying an interest. So somebody make this make sense. This just doesn't, hold on. All right. So getting back to the article, let me pull that up. So if you guys need me to put that back up, I'm happy to do that. Hold on one second. Here we go. Okay. So they also broke it down here. Like, I did the $400,000 loan. They also have here for $500,000 for a 30-year fixed. You're looking at $2,548, 50-year, $2,277. While the longer mortgage term does reduce the monthly payment, it also reduces the amount of equity homeowners build at some point. The savings are minimal, as you see between the 40 and 50-year terms above. There is also a legal obstacle to a 50-year mortgage. After the Great Financial Crisis, Congress passed the Dodd-Frank Wall Street Consumer Protection Act, which made mortgage underwriting stricter. The qualified mortgage rule is part of that legislation and does not currently allow a 40 or 50-year mortgage. So that would have to be changed for this proposal to get widespread adoption. It's possible that a 50-year mortgage could be offered by lenders as a non-QM mortgage. I'll go into that in a little bit. Non-QM mortgages typically comes with higher mortgage rates to balance out the risk. The drop in equity is one reason HousingWire lead analyst Logan Mohtashami does not like the idea. I'm with you, Logan. I understand that we have housing affordability challenges in America, but subsidizing more demand from 30 to 50-year mortgages is not the policy we want to take now. Housing has to balance itself out through slowing home price growth and wages increasing, as it has for many decades. To add another subsidization to the market just prevents the healing process from occurring, which also prevents less equity build out as well. So I'm not a fan of any increasing in the amortization. The 30-year fixed is perfectly fine as is. Additionally, a 50-year mortgage is currently illegal under the qualified mortgage law. So that would have to change as well. So that's what HousingWire is saying about this. Now, I am fully on board with Logan. When I heard this news, I woke up to this Sunday morning. I'm like, you've got to be kidding me. They really think that's going to make it affordable. My biggest thing is just like with Logan saying, you're not going to build equity. The amount of time it's going to take to have any equity in your home, it's going to add years to that. So people are saying, oh, it'd be great. We initially off the bat, we'll save some money on the payments. But then what if you have to sell that house in just a matter of 5-6 years? God forbid something happens, you have to suddenly move. You're like walking away with practically nothing. You're not going to have any equity on the home. So I have big problems with this. So I want to get to some of your comments and questions, because you guys have been waiting for a while. So DL Ross says, the truth is those banks want us in perpetual debt. So they have a gravy train to pull from us our entire lives. We will die in debt, and they get to repo the house and resell to someone else. It's a Ponzi scheme unless you buy at birth. Literally dumbest scheme ever. Well, you know what? I don't think I disagree with you, DL Ross. I really don't. I don't understand it. I'm like flabbergasted by this. How is this going to make it work? It's not. And it's a dumb idea. You're losing equity. Hold on one second. My sound is bad again, Jen. Am I breaking up? Hold on. Oh, hold on. Let me see something. Hold on, guys. Jen, what about now? Is it any better, Jen? Or is it worse? It's better? Okay. Okay, cool. All right. So the fact that you're not gaining enough equity, the fact that you're going to be paying all that interest for just a mere, $200-300 savings per month, that is not affordability. That's not helping affordability. That's not doing a darn thing to it. Jen, what do we got in the comments? I'm going to get to I just see all these questions. None your business. How are you? My company requires us to record conversations with potential buyers when we're walking them through a model home and conducting discovery. What are your thoughts on this? I don't like that at all. It's an unethical violation of privacy, even though it's legal. So none of your business. Here's my question. Do you have to personally record when you're showing the model home, or are there like cameras in the model home and they're recording? I mean, that I understand, because it's also for the safety of the agents and the salespeople. But do you have to personally like walk around with the recorder and personally record the conversation you have? Because that's creepy. That's not cool. I don't like that at all. All right. What else we got? I see Miss H in the house. Hi, Miss H. How are you? Happy to be here because I want to understand what's really going on in this market. Please tell me you have some good news of what you found and see how it may work in our favor. Miss H, I try to bring good news. Try to every week. I mean, I could tell you as far as home sales are concerned right now, they're definitely slowing down. Home price growth is slowing down in some markets. And as I've been talking about this every week, but this week, this 50-year mortgage thing, I'm not happy about that. Yes. Okay. Hey, David Knox, what's going on? 50 years means mostly interest loans and hardly any principal paid down. But if the property taxes are $2,000 to $3,000 per month, maybe it'll help, especially if it's for only a few years or investment. I understand what you're saying, David, but like I just said, you're not building hardly any equity in those first few years. So if you want to buy it to say, if you want to get a 50-year loan, just save some money initially on the payments, and then you turn around and sell it, what are you walking away with? Unless you go and refinance and take that term down to 30 years, that's an option. But yeah, I mean, I understand what you're saying there, but it's, again, you got to think about, I'm always like planning ahead, because God forbid you don't know what's going to happen. So if you have this 50-year mortgage and you have to sell that home a lot sooner than you expected to, it's not your forever home. Where does that leave you? So that's my story, and I'm sticking to it. Blake Burgess, 50 years. So renting from the bank. Yeah. That's what everybody's saying about this. You're basically, we might as well just rent. What is the point of taking out a 50-year loan? Hello, MH, time to buy bank stocks. Yeah. Hold your horses. Maybe not. It'll lower payments, but you pay a lot more in the long run. Yes, absolutely. Absolutely. Who wants to do that? Look, I get it. It's all about the affordability. People are struggling, and those who are first-time buyers are struggling to enter into the market. But for just a mere couple $100, and I know that can make or break people. I understand that, but we need to look at the big picture and what you're paying in interest at the end. And you're paying for 50 years. Oh my God. No. Maria, the 50-year mortgage obliterates the primary symbol of the American dream, which is to own your home. So you will own nothing. Even if you start at the age of 20, you paid off at 70. Excellent point, Maria. I agree with you. I totally agree with you. Hello, Clark. Where have you been, Clark? I say no to the 50-year mortgage because it's just paying double interest. You're absolutely right. Clark, I think there's a lot of agents that are not in agreement with this. I think it's just ludicrous. It's funny though. I have to share this really quick. I was just scrolling through Instagram before I hopped on here before, and I saw this agent post like, oh, let's embrace the 50-year loan. Agents, get on board. Let's evolve and let's change with this. This is a good thing for our market. I'm like, are you who who says this? And then I'm dig a little deeper. I'm like, oh yeah, because they sell a coaching course for realtors, and that's they did this post to get their attention. And there were comments, people were commenting like, are you out of your flipping mind? You think this is a good thing? And the person who posted it, they're saying, well, yeah, we have to evolve, we have to change as agents, we got to evolve, with the changing housing market. No, I say just say no to 50 years. Hello, Nicole. How are you? This may make housing affordable, and the reality is that almost no one pays their house off anymore before moving. The average time in a home is approximately 5 years. Right, but again, how much equity are you walking away with in 5 years? Right, MH, you'll have no equity in 5 years. It's going to take, say, 10 years before you see any type of equity in your home. So, I mean, I can't give you exact number of years, but it's going to be a lot longer. So I think it's dumb. Yes, I agree. You have to allow the housing market to correct. They have to stop manipulating it. We want future generations to afford real estate and homeowners to gain equity. Thank you, Clark. Scream it from the rooftops. We have to get this to correct. Hello, Fred R. The risk of going underwater on a 50-year mortgage is really high as markets fluctuate. Absolutely. So this is just insane. Leslie, a 50-year mortgage is akin to paying rent plus property taxes and insurance. No, you're right. If anybody follows, there's this woman, Glenda Baker, no relation to me. She's a realtor down in Georgia. I believe she's still with my brokerage, a Coldwell banker, unless she left. I can't remember. I don't know. I think she's still with Coldwell. Anyway, she was on a tirade today about it. And that's exactly what she said. She goes, you're renting, plus you have to pay for the maintenance on the home. Right? This is how she's looking at it. You're renting it from the bank. You're paying maintenance on the home, plus your taxes and insurance. Go rent. Then you should just go rent. And that's just really sad. So this is ridiculous. High vibrational, call me crazy, but this makes sense to me since the millennials don't stay in their home like your grandparents. So does it make sense because of the lower monthly payment? Because again, you're going to have that lower monthly payment initially, but you're not going to, when you go to sell the house, you want to walk away with some equity, and that's not going to happen if you're going to sell that house within a few years. It's not. Yeah, sounds like student loans and college tuition. Yep. Let me see. Since 2020, the average home equity has grown an impressive 142% nationwide, a gain largely driven by sharp home price increases during the pandemic. Yes, David, you are correct. However, the market is correcting. We're not going to see values go up like that again. We're going back to a balanced market where they're going to grow moderately. It's not going to be like that. So you can't count on you're going to have that same type of growth in a few years and you're going to walk away with money in your pocket. You're not. It is better than renting because only the taxes and insurance increase. Equities from equity, you can still lose your home because of taxes. Yeah, you know what? But that's not a good way to look at it. I'm being honest with you. Nobody wants to lose their home. Equity is important. This is what, like I bought my house 13 years ago. I got a nice chunk of equity in this house right now, and I can pull that money out when I sell it to go buy the next place. That's the whole point. When you buy a starter home, you live in it for a few years, you build some equity, you take that equity that you built in that home, you take it and you put that down on the next home. You can buy a bigger home. That's how I purchased, or we got a bigger home after our starter home, because why? We had money that we could take out of the house and we sold it and we bought this house. That's what you do with equity. So anyway, inflation depends on transactions. How many Americans will be around no babies, and how much inventory since boomers and Gen X are not around by that time? I don't know. We shall see. All right. So one thing I wanted to I wanted to share with you a couple of more things I wanted to share with you. Where are we? Just looking at my articles here. How the math would work on a 50-year mortgage. So I'm going to bring this up again so everybody can understand what I'm talking about. All right. So let's see. Hold on one second. Sorry, guys. Okay. I'm sorry. I'm having a slow night tonight. I'm so upset about this whole thing. Okay. So Market Watch did this one. They did using Fannie Mae's calculator, the average monthly payment on a 30-year mortgage at 6.2% rate with 20% down on the median existing home sale price of $415,200 would be $2,813, including $2,034 on principal and interest. That falls to $2,577 or $1,798 in principal and interest on a 50-year mortgage. Granted, interest rates would not be the same. Right now, there is no 50-year treasury to help price such a mortgage. But it's useful to think of one given a mortgage is usually priced about 1 to 1.25 percentage points above government debt. All right. Here we go. Okay. The idea behind the 50-year would be to get younger buyers on the ladder, but it probably couldn't move the demographics that much. Buyers of a 50-year product would gain equity, but at a very slow rate. Using $412,200 as 6.2% again, it would take over 20 years to pay off the first $50,000 on a 50-year mortgage versus about 8 years on a 30-year. Did you read that? 20 years to pay off 50 grand versus 8 years on a 30-year. That's the problem. So if you go to sell that house in 5 years, you get nothing. You're walking away with nothing. It's maddening. I don't understand it. I don't understand why. I don't understand why they think this is going to make housing affordable. I just don't get it. Somebody make it make sense. Now, let me see. Wouldn't the 50-year mortgage jack up the prices of the house? So if you're getting a $300,000 house for $500 now with a 50-year mortgage, no, it doesn't jack up the price of the house. As far as the interest, yeah, you're paying more interest on it, but not that doesn't impact the price. What impacts the price is supply and demand. So if you're in a town, you're in an area where there's a low inventory, but you have a lot of demand, a lot of people bidding on one house, overbidding on the house, that's what drives the prices up. So it wouldn't add to the price of the home. People are not staying in a home for 30 years. 30 years is still on the table for those who want it. You can always refinance to a 20-year if the time is right. Yes, you can. Yes, you can. But again, refinancing, you have to have equity in your house. That's the problem. So you can't plan on refinancing in 10 years. You just saw what that said. It's going to take 20 years to pay off 50 grand. You have 50,000 in equity after 20 years. So what are you going to refinance in 20 years? It's just no. I am 41. I refuse to be paying a mortgage until my 90s, even 70 for a 30-year mortgage is daunting. I agree with you. A lot of people feel this way. So there are a lot of first-time buyers right now. The average age of first-time buyers, we're looking at your late 30s to 40 years old. You take out a 50-year mortgage, you're going to be paying until you're 90, like you just said. Who's going to do that? You are literally going to be paying that until you die. AJ, what's going on? People paying cash over asking price are still saving versus taking a mortgage. We run into seller who won't take anything but cash offers. Well, that's not the smartest thing for the seller to only take cash offers. That's not very bright. I would think it's better to want to pay off the loan sooner than later. Why stretch it out? Get from under that debt as quickly as possible if you can. Exactly, Clark. Exactly. That's what people come up with payments. I have a very good friend She's going to have her 30-year mortgage paid off in 18 years by the time her oldest son goes off to college. She's set it out where she's making an extra payments. It's going to be done. It's going to be done by the time he leaves for school. So then they can take their money and put it into their son's education. So, so 50-year mortgage with outstanding interest rate, insane. Yeah. Well, it's the amount of interest, right? So like the example I gave before, 30 years, you're paying 400 and something thousand just in interest. 50 years, you're paying just over $900,000 in interest. It's absolutely insane. So glad we bought our property in Arizona in 2020 when rates were still 3%. Guess we're staying here forever. You might have to. Listen, a lot of people are in your shoes. They, they don't. This is the golden handcuffs effect, right? Who's going to give that up? And where will income be as AI and robotics advance? Yeah, good question. Good question. Let's see how that goes. Hey, Matthew, if you had a chance to make one policy proposal to make housing more affordable, what would you propose? You want to know what I would propose? Stop these stupid corporate investors buying up all these homes, because now there's two different schools of thought. There's been a lot of arguments saying that the Black Rocks of the world only own like a small portion of real estate in this country. But then there's the other school of thought. People are saying, no, they bought during the pandemic a boatload of houses and turned them into rentals. Now, I think they should make it illegal for these corporations to buy single family homes just for the purpose of renting them out. Leave the single family homes for people, for the Americans, for the people who need to live in them and own them. Let them own them. I mean, Clark, if you want to chime in, I mean, Clark talks about where he is in Atlanta. There's a lot of homes that were bought by corporate investors that are now rentals. So that is one thing I would love to see change. And, I would love if they can go retro, go back and make them sell those properties off to people who need them. I mean, it's just, that makes more sense than a 50-year mortgage, right? And get 50-year, then need a roof. Exactly. I only use cash for purchases now, but when a young buyer just needs to get in, then refinance when their income grows. But I think it would only drive up prices. By using a 50-year mortgage, I don't know about that. I don't know. I really don't know about that. I don't see a lot of people taking advantage of this. I mean, the idea of 50 years, number one, is daunting. Number two, when you do the math, any mortgage lender is going to explain to people like, if you do this versus this is what you're saving. Like I just showed before, $200 a month savings. That's it. What's the point? And then you have to you're paying all that interest. And I know keep talking about refinancing, but again, you got when you refinance, you have to have a certain amount of equity in the home. And if it's going to take you 20 years, I don't get it. Banks must need another bailout. I don't think they need a bailout. I think they're just reaching for anything right now to say, hey, this is what we're doing to help housing affordability. And it's just stupid. It's just stupid. I remember the ARM loans when we bought our first house and we opted out. Copper Mountain, that was very smart of you. I have friends that did that too. The lenders were pushing those ARM loans, and my friends were just like, absolutely not. And thank God they didn't, because what happened. We all know what happened there. All right, Miss H, would that have a penalty if someone actually took a 50-year mortgage and wanted to pay it off faster? What's the catch besides paying your life away and not getting anything else? You know what? That's a great question. I don't know. Listen, certain banks, banks have their own rules as far as payoffs. If you're paying payoff penalties, I don't know how that would affect a 50-year mortgage, but I imagine they would. I mean, they want to get the interest on that. So, Clark, Glenda? She is still a Coldwell. Good. Okay, she's with my company. Good, good, good. Do you ever run into her down there? I'm curious. As a millennial, this does not make sense. You and everybody else agrees with you. It's not just yeah. Anyway, okay. Couple of other things I want to talk about. I mentioned before the QM loans. So this is the only time where today you could get a 40 or 50-year loan. It's called a non-QM loan. I actually had a listing once where the buyer on the other side did one of these loans. It's non-QM loans. And what it's for people who are not W-2 employees. They're gig workers, 1099, or they're self-employed. They have their own business. So this is called the non-QM loan. It means non-qualified mortgage. So what it means is the idea is simple: fully documented loans for creditworthy people whose finances don't slot neatly into the narrow rules used by Fannie Mae, Freddie Mac, FHA, or VA. They are not the risky products from the last housing crisis. Today's non-QM loans are fully documented, fully underwritten mortgages that use different paperwork and common sense analysis to show you can repay. So it's not like, remember in, what was it, in 2007, 2008, when everything blew up, there was these no income verification loans. This isn't that. This ain't that. This is non-qualified mortgage. So the only issue with this is you can secure like a 40 or possibly a 50-year loan, right? But your interest rate is a lot higher than if you were going to go with your straight on, government-backed loan, Fannie Mae, Freddie Mac. Okay, so this is the type of borrower that would get the non-QM loan: self-employed, 1099 or a commission. If you own a rental property, your personal debt to income ratio may look high, even when the property cash flows. If you're retired or asset rich, if you have plenty of savings, but you don't have a job, you don't have income coming in, that's when you use a non-QM. If you have a recent credit event, or if you're a foreign national or ITIN holder, if you don't have a U.S. credit or a Social Security number. So this is the only way right now you can get a 40 or 50-year loan, a non-QM. But you have to be in those different scenarios in order to get that type of loan. So, but just a reminder, this is not a subprime. It's alternative documentation. It's not no documentation like we had in subprime. All right, so that's how we can get those types of that length of a loan right now. It's just through non-QM. All right. Do we have any other questions? Because I want to talk about the other thing that dropped today. Gummy worm, love that handle. Wouldn't the interest rate be different on a 50-year loan, as the interest would be higher if it follows the same principles on 15-year loans versus 30? Yes, great question. Yes, I would imagine they would be slightly higher than a 30-year loan too. So that was a great question. But again, this is all just talk right now. I don't think this is going to happen, mainly because of the Dodd-Frank Act. They have to change that law, and I doubt the politicians in Washington are going to allow that to happen. I don't see this happening, and I really hope it doesn't. Just saying. All right. Before we get on to more comments, Jen, I wanted to talk about the other topic I mentioned is regarding Fannie Mae scrapping the minimum credit score. This is another one. It's like the past 2 days I woke up and I'm like, what's happening? Why are we doing this? Well, let's see. Can I make that bigger? Hold on. Here we go. Okay. I want to make this a little bigger for you guys. Okay. Fannie Mae scraps minimum credit score for DU loans. Pulte touts move as big deal for consumers, but small or nothing deal for underwriting. So if you heard about this today and you're freaking out and thinking, oh my God, we're going to have another 2008 disaster, because now they're eliminating the 620 minimum credit score. This is going into effect like next week. It says here, it announced it's eliminating the 620 minimum credit score. loans processed through the desktop underwriter system effective November 16, 2025. The change, detailed in the latest DU version 12.0 release notes and selling guide update, represents a major shift in mortgage eligibility and could help more borrowers with lower credit scores but solid finances qualify for loans. Bill Pulte, U.S. Director of Federal Housing, noted on Friday on his X account that this would be a small change for underwriting, but a bigger deal for consumers. Our underwriting standards are the same. As a process matter to ensure 2 scores can be used and not just one, we eliminated requirement for the FICO score in the infamous guide. Big deal for consumers, small or nothing deal for underwriting. Instead of relying on a hard credit score cutoff, DU will now evaluate a broader set of credit risk factors, including a borrower's credit history, income, debt levels, property characteristics, and loan purpose. The DU risk assessment reflects a comprehensive evaluation of credit risk factors from a borrower's credit report, along with the non-credit risk factors from the loan application. The minimum representative credit score requirement of 620 will be removed for new loan case files created on or after November 16th. This requirement will be replaced with the minimum credit risk standard based on the credit risk factor evaluation within the DU credit risk assessment. Fannie Mae's move follows Freddie Mac, which previously eliminated its own minimum score for loan approvals. However, Fannie Mae clarified that lenders must still request credit scores from all borrowers as required for loan sales, and certain loan types or private mortgage insurers may continue to impose their own minimums. The update also expands Fannie Mae's Day One Certainty Program, offering lenders relief from enforcement of representations and warranties. Okay, we don't need to know about that. So that's the deal. So if you saw this in the news today and you're freaking out and thinking, hold on, stop sharing you. So if you're thinking, oh great, now we're gonna have now people with like no credit are gonna be getting loans. That's not the case. You're just removing that one credit score. But I was watching different lenders today on all the socials, and they already knew this from the lender I work with. They look at everything. Credit score is not the end all be all when you're applying for a loan. They look at the debt to income. They look at your history, your payment history. If you were in collections at any point, they look at all of that. So you're not, believe me, I don't think this is going to have an impact. I just from what I know from talking to lenders and stuff. So Clark says, I heard about that with Fannie Mae. I am like, what is going on with this economy? What are they not telling us? I know. It's mortgage apocalypse. I don't know. That one didn't, like, it initially scared the crap out of me. But then when I dug into it a little bit, I'm like, okay, I understand what they're trying to do. Because what happens is when you have that credit score, it probably it automatically like eliminates people from being able to qualify. But say, you had a couple of missed payments, it brought your score down. Okay, fine. But they do dig deeper to see the payment history. And the biggest thing is the debt to income ratio. If your debt to income, your DTI is no good, you're not getting qualified. Sounds more like predatory lenders ahead. I don't know about that. I don't know. I mean, this is coming from Fannie Mae. This is from the government, but that's my thought on that. That's my story, and I'm sticking to it. A neighbor's friend is interested in a semi-dilapidated house I inherited. The neighbor gave me their contact information. Should I contact them myself or have a realtor contact them? Well, depending on where you are, where you're living, it wouldn't hurt for you to contact them. If you're going to bring a realtor in there, you're going to have to sign a listing agreement with them, and you're going to be paying them a commission. All right, I'm just being upfront with you. If you feel comfortable that you're able to sell the house, and you don't need a real estate agent, if you've done this before, if you've sold real estate before, and you're like, yeah, I can do this, and that's fine. But if you haven't, maybe you do want to consult a realtor, and maybe you won't have to like pay a whole listing, a whole commission for a listing, and maybe you can hire them, just pay them a flat fee to just handle certain things with the sale. So that's what I say. Mary Beth, what's going on? Not being political, no offense to anyone, but terrible proposals coming from both sides. I feel this is just another attack on true American home property ownership. This is a nightmare. Mary Beth, I don't disagree with you. Look, I never get political here, and I'm not going to get political. But this is getting flipping ridiculous. Like, fix it already. Fix it. Just these are just the dumbest ideas. This is the dumbest one. The dumbest one. I'm sorry. Like I said before, stop the corporations from buying all these houses and driving the home prices up. Let these people own the homes, not rent them from these corporations. Just joined. Wouldn't 50-year make prices shoot up since you need less income, thus higher demand? Not necessarily, no. No, all that 50-year loan does, it's just extending the terms of the loan, making your monthly payment lower. So it doesn't necessarily mean you need less income. You could get an FHA loan, a 30-year FHA loan, and only put 3.5% down. 50-year loan, I would imagine if it's a conventional, you're going to need, I mean, some conventionals will take 3.5%, but I mean, I think at minimum it's 5% down. But then you're going to be paying private mortgage insurance. Here's another thing. If you're going to put like 5-10% down on this 50-year loan, you also got PMI on top of that. Where's the savings? Now, it's dumb. Hello, my friend. This is going to be another 2008. This is insanity. I hope not. I honestly, I don't see this. I don't see this passing. I don't see this happening. I hope I'm right, because if they do this, that's just, no. A lot of people that fold bankrupt in the past recently without the credit score, how will that still help if they try for a loan? And VA getting loans, will that be better for them also? You're talking about the credit score, Miss H? Yeah. So here's the thing. If you filed for bankruptcy, you can't apply for another mortgage. I think it's a 7-year. No, I'm thinking foreclosure. Foreclosures, there's a wait period before you can actually apply for a mortgage again. Bankruptcy, I think, is 10 years. So that's going to show up. Even if you don't have a credit score, if that minimum credit score is not there, the underwriting system is still going to dig deep into your history, your credit history. They're still going to see that. Isn't at least hello, Cato, at least 50% of information on credit reports inaccurate? That I don't know. I can't answer that. I never heard that one before. I don't know. I never thought it was. Simply a different angle. The Affordable Housing Act is what allowed all the private investors to come in and take over. And now this is insanity. Mary Beth, it's not just private investors, it's corporate investors like the BlackRocks. Those are the companies that are taking over. Did you see, I think I'm going to post it in the community, a video I did now. I think it's going on 2 years now. It's a company, it was called Tricon. They were based out of Canada. They have now been bought out, I think, by BlackRock or one of the big ones. And Tricon was buying up homes like crazy in the Sunbelt area. And their philosophy was millennials don't want to own, they just want to rent. So I did a video about, there's a 60-minute segment about it, talking to the guy at the time who was the CEO of Tricon. I'm going to put that in the community thing. I want you guys to watch that, because that was kind of scary. Budget tools. I want to buy the condo next door. It's been on the market 21 days, 6 showings, 15% higher than the average comps. When should I suspect a price drop? You might not see a price drop if the seller's not realistic with their price. So if you want to go in and make an offer, make an offer. Make it 15% less what they're asking. Go in there, just throw a number at them, see if they'll negotiate. That's what I would do. AJ, I'm in a position now after 5 years of searching where I can no longer smart pay for a house from retirement assets without raising my IRMA. And I have to take a mortgage out now and pay into my 80s. That's frustrating. I'm sorry. I bet they wanted to undo Frank Dodd. That we got problems if that happens. That's I didn't want to think about that. But thanks for bringing that up, MH, because I you might be onto something there. Let me see. All right. Who else we got here, Jen? And we got a lot of conversations going on. Let's see. It's going to be like the student loan debt never ending. Yep. That's right. That's right. That's what's going to happen. Darren, they never do anything for the buyer's advantage. It's just another billionaire scheme to keep you strung out on payments until you're dead. I love how honest you guys are being about this. And you know what? I don't disagree with you. I don't. They need to lay out an amortization chart in front of all of us so we can see how much interest you'll be paying over time compared to the principal with a 50-year mortgage. Yep. Yeah. So if you guys are researching this, you're reading up on it, just Google how much interest would I pay on a 50-year loan. You can do that, or just go into a loan calculator. I just pulled it up earlier. There's a 50-year loan calculator. Go check it out, and you see how much you'll be paying, and you'll think that this is not a good idea. You know, or talk to a lender. When we know if this 50-year mortgage thing goes through, who knows? You know, who knows? They're just throwing that as an idea out there. I think what they do, they like to throw these things out there just to get a feel for what the people think, what Americans think about it. And if people make a big enough stink about it, then maybe they won't follow through with it. So, hey, nice to see you. Nice to see you, Obi. Thank you. 50 years of win-win for banks, I see. Wonder how long to pay off making 3 extra payments a year. That would, yeah. Uh-huh. I would love to see that too. If I got this loan, I'll be making extra payments towards the principal, which banks allow. It gives you options. It's a great loan for people who are strategic. That, you know, that is a good way of looking at it. Yeah, I mean, look, if you can make extra payments to get the equity building faster, yeah, you could do it. It's still going to take longer, though, than if you were to take a 30-year. They have a truth in lending document that is required to give to buyers that lets them know how much interest they're paying over the life of the loan. Yes. Would this be a land grab for rich people because we want to be able to stick with the 50-year mortgage? You know, Copper Mountain, I think you and I would get along very well because I'm always thinking like all these crazy things. A little bit of a conspiracy theorist here. Like, why are we doing? Like, I question everything. Like, what's the point of that? Weird, seriously. Are they essentially eliminating credit scores or simply the minimum score requirement? They're eliminating the minimum score requirement. That's what they're eliminating. So, I could see the mortgage move to 50-year loan. Car loans are currently 60, 72, 84 months, which is ludicrous. I hope they don't. I really hope they don't do it. It's just dumb. It's dumb. I just had a housing win. Hello, it's my client, Joey. All right, I can. Joey, thank you so much. Thanks for watching, Joey. My best client. I love Joey. Joey and I, we've been working together for a few years now. And last week, Joey closed on a gorgeous home here in Bergen County. And congratulations to you and your beautiful family. And thanks again for allowing me to help you. So thank you. How are home sales in Bergen County? Well, they're slowing down a little bit. Still, you know, we're starting to, we're coming into the holiday season, so they typically are slower right now. But I am projecting that I think Bergen County is still going to be, it's going to be pretty hot again. come after the holidays, because there's all this talk, and I don't want to get into this. I don't want to get into all politics things, but because of what's going on in New York City right now, there's a lot of talk about people wanting to get out of New York City. So we're anticipating another an influx of people moving here. So I heard Monmouth County, an agent that I follow in Monmouth, he says they're anticipating prices to go up 15% next year because people want to get out of the city. So we shall see. Yep, it's gonna be very interesting times here next year. Future buyer here, can you please give a quick pros and cons of PMI? I believe that kicks in if the down payment is less than 20%, but I saw the average down payment today is only 14.4. Elizabeth, excellent question. Anytime you put less than 20% down, you will have private mortgage insurance to pay on that loan. If it's a conventional loan, once you reach a certain point of equity, you have some equity in the home, and it's typically about, I think, like 8 to 10 years, you can get that PMI removed. And people have said, no, you can't. Oh, yes, you can, because we did it. My husband and I did it. Our first house we bought, we only put, I think we put like 12 or 15% down. We had that PMI. We got that taken off once we reached that point. You have to go through a whole process, get an appraisal and all that, but we did it. We got rid of it. So yes, I mean, there's no pro to a PMI. It's kind of annoying. I mean, it's not super expensive, but it's just annoying that you have this extra cost on top of your payment. Good news, we looked at more houses in the last 2 weeks. Then in the last 4.5 years, was actually going to bid on a house, but a realtor told us it would be useless. Well, I hope they said, AJ, it was useless because it wasn't a good house or it wasn't worth it. And they're not discouraging you for the sake of discouraging you. I just hope that was the reason. Exodus out of New York City. Yes, there's a lot of talk about it, but listen, only time will tell. We've been seeing the exodus from New York City since 2020. Even when the pandemic ended, people are still moving to New Jersey, upstate New York, and Connecticut. It's still going on. I can't tell you how many people I've spoken to that were from the city that still want to move out here. Yeah. Is there any kind of loan, mortgage, or scheme which allows me to buy a home right now and move after 1 or 2 years? Buying as investment and move later is economical, or is there other option? Allows me to buy a home right now and move. So you're looking to buy the home, own it for a couple of years, and then rent it out? That you could do. You can because you're saying you're buying as an investment. You can do that. The only thing is you have to be careful though, because if you get a loan on that, you got to make sure it's going to be for investment purpose. You can't say that it's your primary residence. If it's strictly for investment, that's the difference. So speak with a lender about that. They'll be able to walk you through that. Thank you, Jen. Poll, we have 171 votes. Do you think the 50-year mortgage will make housing affordable? 12% of you said yes. 88% of you said no way. I'm not surprised. So you're all with me. So let me talk to you really quick about Zillow's most recent lawsuit. My friends, please be careful with Zillow. And I'm going to tell you why. This is a good one. I don't know how Zillow is going to survive after this year with the amount of lawsuits they've had. Here we go. Okay, you ready? And are we surprised by this? Now, Zillow faces lawsuit alleging illegal kickbacks in mortgage business. Zillow sued for allegedly using illegal kickbacks to steer buyers to Zillow home loans in violation of RESPA and consumer protection laws. Zillow's mortgage business has grown rapidly over the past few years, posting a 57% annual increase in loan origination volume, which rose to $2.3 billion in Q3 2025. While Zillow maintains that this growth is purely organic and due to it making it easier for more home buyers to choose financing through Zillow home loans, others are not so certain. On Friday, I didn't log in for my article here. On Friday, Araba Armstrong filed the lawsuit in U.S. District Court in Seattle, claiming that Zillow used illegal kickbacks to bolster the rapid growth of the mortgage business. Araba is a first-time home buyer in Anchorage, Alaska, who purchased a home with the help of a buyer's agent she connected with through Zillow. She claims she obtained a pre-approval and eventually her mortgage from Zillow Home Loans at the direction of her agent. So listen, this is your warning right now. If you're going to get a home, if you see a home on Zillow, it's my public service announcement for the week. If you're going to buy a home, you go through Zillow, you're going to work with the Zillow agent. Do not let them talk you into that. They are a major violation by doing that, by steering their buyers to using. We're not supposed to be doing that. We're supposed to be suggesting more than like 3 lenders, and you choose the lender, or you go find your lender on your own. What they're doing is absolutely ridiculous, and I'm not surprised. Clark, I mentioned the last time you were live about Zillow steering people to home loans, and this is going to be a problem. Yes. And here we are. They're in another lawsuit. When the heck is this company ever going to learn? They're going to be, I'm telling you, I wouldn't be surprised if they go under sometime soon. Yeah. How will they be able to maintain? Clark, I don't know. This is why Zillow? Why? I know. They're dumb. They're dumb. Hey, Skyfall, thanks. It's absolutely ridiculous. Let me see if I can get the rest of the article up, because I'm such a dope. I didn't log in. Anyway, so but what would happen if Zillow ended up going under? Like, what would everybody do? How is everybody going to go find a home? Right? All right, well, I don't want this right here. Hold on. I hate these pop-ups. I got to figure this stuff out. I really do. Pull that back up again. Okay, here we go. All right, so they're seeking class action status for this. The lawsuit is seeking class action status for a proposed class of all persons in the U.S. who were referred to ZHL by a participating agent and obtained a mortgage loan from ZHL in connection with the purchase of a residential property. The plaintiff is demanding a jury trial, damages, and is asking for injunctive relief, preventing Zillow from continuing these allegedly unlawful practices. Last month, the Capital Forum published a report claiming that their research and reporting shows that Zillow's Flex program could violate RESPA. The report detailed interviews with several agents, many of whom claimed they were Zillow Flex agents, in which they said that Zillow required Flex agents to steer home buyers to use ZHL for the loan pre-approval. A Zillow spokesperson clarified that there are a number of factors Zillow considers and several requirements an agent must meet to be part of the Zillow Flex program. Zillow said that this list of factors is examined when considering to reduce the number of leads an agent receives, remove them from the program, or increase the number of leads they receive. Our approach prioritizes transparency and consumer choice, ensuring consumers receive the information and services they want and ask for at the right time throughout the real estate journey. Through our strong partnerships with real estate agents, ongoing product innovation, and steadfast advocacy for consumers, we continue to set a high standard for responsible engagement across the real estate industry. This is not the first time Zillow has dealt with allegations of RESPA violation related to its mortgage problem. In 2023, prior to the launch of ZHL, Zillow settled a class action lawsuit related to its mortgage co-marketing program. The program was also allegedly under investigation by the Consumer Financial Protection Bureau, but the investigation was dropped without the CFPB issuing an enforcement action. Zillow did not immediately respond to HousingWire's request for comment about the lawsuit. So guys, again, if you're going to use one of these Zillow Flex agents, just don't say no to their loans, please. Like they're getting kickbacks on that. I don't know how this is going to work for them. These lawsuits are going to put them under. We'll go back to the old days, driving around to see signs in yards and waiting for the housing books to come in to see what properties are listed. Wouldn't that be lovely, Clark, if we went back to the days? Do you think 50-year mortgage will prevent a housing market crash? That is an excellent question. I don't think so. I really don't think so. No. And it's not gonna make homes affordable either. Clark, and if you don't steer them to Zillow Home Loans, they will lower your conversion rate and send you less leads. It's all bad and illegal. It is. Why people would want to work for them is beyond me. All right. I am 41 years old with almost 180,000 student loans and two bankruptcies, 7 and 13. I would like to do a 15, 20-year mortgage, but I would need a lower cost home, which is hard. What to do? The first thing I would do is I would speak with a lender. You got to speak with a mortgage lender to see what your options are. I know, and to find a lower cost home, you might have to look outside where you're living. You got to look in an area where you can find a cheaper home. I mean, that sucks. But the first thing I would do is you have to talk to a lender and see what they say. Zillow's worth over 17 billion. Any lawsuit payouts will be a drop in the bucket for them. But you know what, Kat? Maybe somebody needs to sue them for 17 billion. I don't know. Just a thought. Joseph, do you support government intervention that could be implemented to lower the price of homes at the expense of current homeowners' equity to get critical average price medium? I don't like the government getting involved with anything, honestly. I don't think they should. That's, the only way, like, if they could find a way to help bring more homes to the market to increase the inventory, like cut the red tape, the bureaucracy with these builders to allow them to build homes, something like that. I would support that, but no. The only way, I've been saying this, is we need more supply to balance out the market, and we're already seeing that supply increase in the southern markets. And you see the corrections happening. It's right. The data doesn't lie. It's already there. It's happening. So it's proof. More inventory, prices come down. And that's what needs to happen. Lauren, what's going on? You're out of the housing market right now, saving up more money, but still having fun watching you. Thank you, Lauren. It's good to see you. Good to see you. Thanks for coming by and checking out the show. Appreciate it. Hope you still learn more information. All government needs to do is put a cap on investors taking equity debt to buy more houses. Yeah, that too. And stop them from buying single family homes. Let the American people buy these homes. That's got to stop. I was looking at a property in another state a couple years ago. I found a neighborhood I liked and drove around looking for signs and looking them up. So yeah, where's Clark? Jen, I got to put Clark's comment up here. Hold on one second. Here, I got it. Get the corporate investors out of Metro Atlanta. They've manipulated our market so much. Clark, I think in the near future, I want to bring you back on to talk about the Atlanta, Georgia, where Clark is a realtor down there, and he's been experiencing this for a while now with these corporate investors scapping up the homes. And it's just absolutely disgusting what's going on down in Georgia. So Clark, I think I need to have you back on. We got to talk about that. Okay. South Carolina native. I just bought a home in Rhode Island. Land is a lot more expensive up north. That is for sure. Absolutely. Why? Because we don't have a lot of houses for sale. There's not a lot of homes. That's why. There's big difference between up here and the South. It's because there's no inventory. Maybe change zoning or more than 3 homes an acre. That's a possibility too. Chloe, I'd love to see Clark on. Okay, we'll have, all right. Votes are in. Jen, I had to put this up here. If I could make a policy in government, I would allow people to use the Social Security 401k as collateral for down payment closing costs. I wanted to bring this up. It's so, I don't know how you guys must read my mind. The video I'm putting out on Wednesday, it's 10 dangerous shortcuts to buying a home. And it's all related to the financial shortcuts that people take in order to get into a home. One of the things that I mentioned is talking about people borrowing from their 401k to use as a down payment, which you are absolutely entitled to. Okay, you can borrow up to 50% of your 401k or a maximum of $50,000. Okay, now you have a repayment period, like about 5 years. It depends on your 401k. Here is the problem with that. You all need to think about this. If you get terminated from your job and you still have an outstanding balance on that on that loan you took out from your 401k, guess what's going to happen? That's going to trigger that you took money out from your 401k prior to you turning 59 and a half. You're going to have to pay taxes and you're going to pay penalties on it. This is something I think is so important people need to be aware of. If you're going to borrow from your 401k, you damn well better pay it back a lot faster than, say, 5 years. If you can do it, put it back in. The other issue you're going to have when you borrow money off the 401k, you can't make new contributions until you pay off that loan that you took out. So I get where you're coming from, using the Social Security 401k as collateral for down payment. You got to think about retirement. Okay, it's going to be very expensive to retire in this country. You got to get that nest egg saved up. Can you tell I'm married to an accountant? This is all he stresses about. It's all about, what do we have enough money in retirement? But the 401k, borrowing that to put down on a house, I'm not saying never do it, but just be aware of that. So God forbid you lose your job, then you're going to get slapped with taxes and penalties on the outstanding balance. People will be upside down on the loans, and it'll be a liquidity crisis. Yes, you guys had a lot of good stuff tonight. This is great. Just want to make sure. Let me see. Got a lot of comments, guys. We're doing our best. We're doing our best to get through them. Let me see. Leslie G. In 15, 20 years, when all us boomers kick the bucket, there will be a flood of supply. That's when the market will crash. That's my thought. But you know what, Leslie? Here's the thing. If you have children, aren't you going to pass that on? Wouldn't you rather pass the house on to your children? Because that's what I hear a lot of boomers say. Their house won't even enter the market. It's when they die, they're leaving that house to their kids. So either they'll move in or they could potentially sell it. But if we're still in this situation that we're in, why would, if my parents died and they left me a house, hell yeah, I'm gonna stay in that house because I can't afford something else. So something to think about. We have two different companies that are advertising heavy on the Front Range of Colorado that they will buy your home any condition. Drives me nuts. I got to look into that. I don't like the sound of that. Can you speak to a timeshare foreclosure surrender preventing buying a home at credit score 724? I really don't know much about that. You know what? So if you, okay, timeshare foreclosure, I don't know anything about that. You have to talk to a lender. I'm sorry. That's the first time I've ever been asked that. Borrowing and withdrawals from IRAs, 401k can raise your IRMA and taxes if nearing retirement. Okay. Thank you, AJ, for sharing that. I would like to pass my property and house to the children, 16 acres and family heirlooms for furniture. You see? I mean, honestly, I would. So Jackie, about the boomers, there's a house in LA that would be a great house to buy, but the sellers don't want to sell it. They want to buy so they can pass down crazy $6,500 a month. Yeah, that's what they're doing. And can you blame them? They're all about saving. They want to save their kids. Vast majority of inherited homes are put up for sale. All right. I don't recommend borrowing your 401k to buy a home. Retirement approaches quick. It sure does. When I think about how close I am to it now, like, oh God, no. Inside every 80-year-old is a 20-year-old asking what the hell happened. Right? Sorry, I don't have kids. I sometimes forget I'm not the norm. Oh, that's fine, Leslie. That's totally fine. Um, anyway. All right. Oh my gosh, we have all these questions. This has been great. Let me see. Jen's working on double duty tonight. Holy cow. All right. Let me just making sure I'm not forgetting anybody. Um, all right. What are your thoughts on tiny homes? I feel this is where society is headed. Listen, if you're into the minimalist lifestyle, I think it's a good option. Um, but there's issues with that too. Like a lot of it, I did a video about that. I think about a year ago about tiny homes. The problem is, a lot of towns with their zoning laws and what have you don't really like them. People are putting tiny homes on in the backyards of other homes, and they're considered what do you call it? ADUs, accessory dwelling units, and yeah, some towns get a little weird about it. Unless you build like a little community of tiny homes. But listen, some tiny homes they can get really expensive too. Not all of them are only $10,000. They can get pretty expensive. That's so funny about the tiny home comment. I remember the comment, do I have to sit on the toilet to shower? Yeah, you got that too. So if you're into the minimalist living, yes. Anyway, you guys, we've been on for a while. This is a lot of information. So what I always recommend, I tell you guys, always do your research. I come on these streams every Monday to present you the information, but if you feel the 50-year loan is 50-year mortgage, that's what's going to work for you, and so be it. But make sure you do your homework, you talk to lenders, and you understand exactly what that savings looks like and what the total interest looks like. May not make sense. It might make sense for some, it might, but it may not. It's for others. I don't agree with it. I don't think this is what's going to solve the affordability problem we have in the country. It's not happening. All right, don't let me answer this. I have read many pros and cons of a paid off house. What is your opinions regarding to buy a house in full as a primary house at the age of 50 plus, having three little kids, Northern PA or Southern Upstate? If you have the money to do it and you don't want to have a mortgage, then, I don't see an issue with it. The benefit though to having a mortgage, again, when I'm married to an accountant, this is what I like this like drilled in my head. You can take like a small mortgage out. This way you can write off, you deduct the interest for your taxes. You can write off the interest payments on your mortgage. So it's that benefit, right? You had the benefit of the interest and tax savings at the end of the year. So, but talk to a lender, talk to an accountant, see what fits you best. But I'm just, I'm giving you the pros and cons here. So, Maria, thank you. Yes, it was a very lively chat. Yes. Jen really worked hard tonight. So, all right, you guys, thank you for being here. So appreciate it. Remember, if you want to be connected to a real estate agent in your market where you live, go down in the description box, click the link for an agent referral, and I will get back to you as soon as possible with an agent in your area. So thank you guys so much. Have a wonderful week. I'll see you all next Monday. Let's hope it's not as crazy as this week with all this news. All right. Have a good one. See you next Monday.